Carl. Thank you. Thank you very much for that. Third company to present this evening is Trans-Siberian Gold. The clue's in the name. It's a gold producer, developer and explorer in Russia. It focuses on low-cost, high-grade mining operations and stable gold production. And somewhat unusually, it's got revenue, profits and dividends. We're lucky to be joined this evening by Stuart Dixon, Director of the company.
I don't know anything about this. I hope I know something about this. Thank you for Hardman for inviting Trans-Siberian to come and talk to you this evening, and thank you all for coming and braving the tubes and the taxis. I'm going to talk to you about what is quite a complex, or sometimes a complex subject, because mining is inherently multidisciplinary. It covers geology, it covers technology, it covers engineering, and you'll hear lots of jargon. But in our minds, our business is very, very simple. It is about extracting gold from the ground, producing a doré bar profitably. And it is simple as that. Because everybody else has opened up about coronavirus, we might as well copy them. And there's been a lot of talk about headwinds. Unfortunately, on a human and an ethical level, coronavirus actually presents quite a significant tailwind for our business. You've seen the gold price perform very strongly in a very uncertain environment currently. And hovering around $1,650, $17,000 an ounce makes our business very profitable. We've also had a second windfall, or tailwind, in that the spat between Saudi Arabia and Russia in oil prices has had an effect, a positive effect for us too. Energy is our largest input cost, and you've seen that fall dramatically, and you've also seen the ruble devalue some 9% overnight. Why is that important? Because our costs are in rubles and our revenue is in US dollars, which is appreciating. That is Kamchatka. A bottle of champagne for anybody who's been there. It's always a safe bet. So what are we? Trying to squeeze a 20-year-old company into 10 minutes is enormously challenging, so I'm just going to focus on some of the key things. AIM listed in 2003, largely a dormant company for the markets for quite a long time. And what changed in 2017 is you had a change of leadership, which really meant that we wanted to use the markets more efficiently. And we hadn't had to use the markets because of our ownership. The company is majority owned by a multi-asset manager based in Moscow, and we'll talk about United Financial Group a bit later. But the key critical date is 2011, when the company started to come into production, and we have a 9-year track record of gold production from the Asacha gold mine. The Asacha gold mine is on the far right of Russia. It's the Far East. It's an underexplored economic area. It's a beautiful area, as you've seen from the previous slide. And it is a 9-hour flight from Moscow. So we are talking wilderness here. We're talking about supply chains, but we are also talking about employing 700 people in an underdeveloped economic area, and that is important to that region, which makes us a significant company in that region. We're actually closer to the US than we are Moscow. So that's our share price. It's a nice hill, or red run if you're a skier. We had a great summer last year, and then we had two double whammies, basically, to talk very frankly with you. We had a resource downgrade. What do I mean by that? We thought we had to say that we had less gold than we thought we had, and we'd been advised we had. That's as simple as that. And we had to give some very clear guidance around how much gold was left in our mine, and we've been very clear and consistent on that. It's 4 to 5 years based on the current resource inventory. And you can see the effect that's had on the share price, as well as one small family office deciding to exit, having been a patient investor for some 13 years. And I think that's the key thing, patient investors. I talked about United Financial Group. They have been in a mining stock as a non-mining investor, as a geographic financial investor for nearly 15 years. So that makes us very unusual, but it also means that we are very disciplined in how we approach our business, because when you have an investor like that on the register, it means we are very focused about financial returns, and we'll come on to that in more detail. For those of you who will have maybe heard all the myths and all the horror stories and some of the spiciness that comes out of Russia and resources, I've got to let you down gently. There's no oligarchs, there's no Mayfair offices, there's no yacht in Monaco, and my PA is not a supermodel. And that bears testament to the fact that they're not. These are my colleagues. Proven Russian experience is really the point I want to draw your attention to, and particularly my UFG colleagues who have 2 decades of experience of investing in Russia. So why is this? Should this hopefully be a little bit of interest to you if you don't follow mining, or you're just interested in something that's a little bit unusual? Well, we are unusual, as I said, by our ownership. We're also unusual in that we beat expectations. We produced $63 million of revenue, and importantly, we paid $21.5 million of dividends in under 4 years back to shareholders. So it comes back to this financial discipline. Why are we able to do that? And the secret sauce is really that 7.8 grams per ton. And that is how much gold is in a ton of ore that we extract. And I'll show you a slide later that puts us as one of the highest grade gold producers on the London Stock Exchange, and also as one of the highest dividend payers on the London Stock Exchange. I think the question was, what's our break-even point? It depends on each operation, because there's many different things that feed into that. I can show you a slide later which will show you all your London peers, and then you can make your own minds up about their profitability. So that's what we want to do. Asacha Gold Mine, we want to keep enhancing it. We want to grow, and I'll talk about growth as well as yield later, and how we're going to do that. We're also on the hunt for assets. So this is what we're going to do in 2020. The 2 right-hand blobs are focused on Asacha, and that is our existing gold-producing mine, and there is a lot of drilling going on there now. 25,000 meters worth of drilling. That's just under $8 million of funds committed to that process. That $8 million is fully funded. Again, that distinguishes us from quite a lot of other miners that are over that way and have unfunded drilling programs. But the growth then comes from Rodnikova, which is the 3rd strand there, and that is a development asset, i.e. it's not in production yet, but we're working now to bring it into production in the short term, and we'll provide our preliminary economics around that at the end of Q2, which will then feed into how we finance and then how we develop the asset. And the 4th strand is, as we said, we see ourselves as buyers in this market because we have that financial capability, we have the access to financial resources, and we have know-how. And I'm sure some of you are going to ask me what we'd like to buy, where we're going to buy it, and when's it happening. I'm very happy to take those questions later. But why do we do all of that? And again, it comes back to the discipline. It's either focused on increasing resources, i.e. how much gold we have in the inventory, or how much we produce. And that directly links to either creating value through resource inventory or creating free cash flow and dividends. So everything comes back to a very clear purpose about what we're trying to do. I'm going to go through these slides very, very quickly because they're quite technical in places around the gold mine. If you notice, we use lots of pretty pictures of this rather than lots of ugly pictures of men in engineering equipment and all the rest of it. It's because it is absolutely stunning, and it's a gorgeous place to go. But it means that we have to take our environmental responsibilities extremely seriously. It is a protected areas around in that region, and for good reason. So that's where we are. I'm not going to talk about geology, but what I am going to say is that this is, for those of you who follow this sector slightly, this is Ring of Fire. This is a well-known geological occurrence that around the Pacific Ocean you see high-grade, mainly precious metals and base metals deposits. And we are sat right on one of them that is underexplored. And why is it underexplored? It's because Kamchatka is a peninsula in the Soviet time that was strategic to the Soviet foreign policy, which meant that access, frankly, was restricted to not only Russians, but also foreigners. So not a lot of people have been crawling all over it, looking for gold. And to some extent, we have first mover advantage. That's how much gold's in the ground. I'm very happy to talk about that offline. That's what we've done. And I just want to talk about the bottom right-hand slide chart, rather, which is all-in sustaining costs. I talked about jargon a bit earlier. And this is the margin for the gentleman at the back who asked the question about margins. So that is how much it costs us to produce an ounce of gold and also continue to invest in our business going forward. So for the first half of 2019, it was $850. Full year 19 numbers will be coming out shortly. And we have given guidance for 900 to 1,000 for 2020. Put that in context, we've got a 1650, 17,000 gold price. Sorry, 1,700 gold price. That's where we look on the peer group, and of those who've announced what they think their all-in sustaining costs is. Some people haven't published yet. So we're in the right end of the chart. We are slightly higher year on year, and the reason is because I said we're investing in drilling at Asacha to prove up more resources. 2019 was a record production year, 43,000 ounces, and you can probably then draw your own conclusions from if we have a favorable gold price environment, we have a record production year, you can probably take a stab at what the financials will look like coming out, but obviously that comes with a huge health warning. This is how we do it. It's a very simple sub-level sloping method. It's shallow, it's 200 meters underground. We're actually going into a hillside, so it's relative levels rather than depth. And as you can see, it's actually reasonably straightforward. Processing, again, is straightforward. It's a off-the-shelf technology, carbon-in-leach process. This is not reinventing the wheel. As I said, we've been in production for 9 years, and I'm sure some of you have heard other gold companies talk about this process before, so it really is nothing new. And the bottom right picture is really the most interesting one. It's the one that really gets me going, because that's what it's all about, producing doré bars of gold, and they are enormously heavy and well guarded, before you ask. Gentleman asked me at the back about grade. This is your London-listed peer group. And as you can see, I've kindly highlighted TSG on the penultimate slide on the chart on the right. Grade is king, is a phrase in the mining industry, as well as cash is, because it is directly linked to your ability to generate cash. If you have a high-grade ore body, frankly, for every ton of ore you're moving, you're actually moving more gold. It's as simple as that. As I said, I'll try and keep this reasonably straightforward. But this is what we're doing going forward. We've got a 25,000 meters worth of drilling around Asacha, the existing mine in production. As I said, that's fully funded. And as you can see, some of those grades there are off the chart in terms of peer group. So we ran at 7.8 grams per ton for 2019, we're drilling 133, 22, 30, etc. So you get a flavor of the quality of the ore body. Thank you. I'm not going to talk about that because I talked about the oil price earlier, but we do get a subsidy from the Russian government. Rodnikova is our development asset, and this is kind of what's coming around the corner and our next mine. And all I want to say is it's more of the same. It's another high-grade deposit. It's 5 grams per ton, 1 million ounces, which we defined in January, came out with a JORC statement on that. And JORC is a classification to give you a level of confidence of that. It's 50 kilometers down the road from Asacha. And when I say down the road, it is a track road. So that's going to present us with some development opportunities about how we process that ore using our existing infrastructure. And more importantly, some synergies. And I'm just going to gallop through all of that and talk about that one, because that's really what you want to see. $21.5 million of dividends in short order. So it's a little gold mine. Come on, I usually get a better response than that. Should stick to corporate finance, not stand-up. So that's really what's coming around the corner. What we've done and what we're going to do, all of that's in the public domain. We're very excited about it, and I'd be delighted to take any questions you may have. We sell our gold to a Russian bank, and we have a contractual arrangement with them where it's a small discount to the spot price. So basically what you see on the screen of the gold price is basically what we get minus 0.1% or 0.2%, depending on the prevailing conditions. The bank, in turn, we understand, do sell it to the Russian government. And the Russian government, for those of you who are not aware, is one of the largest purchasers of gold on the planet right now. It suits their macroeconomic policy to have a gold-backed ruble. And so what we produce is a strategic product that supports the Russian economy. Correct, yeah. I think it's probably the most stable government in the world right now. Putin's been in power for well over 2 decades. I don't think he's going anywhere. So it sounds like a slightly glib answer to your question, but actually we're dealing with knowns. We are not dealing with the same political uncertainty that we see in other jurisdictions where our peers in the gold industry operate. What we have is very clear defined regulations and laws, and they uphold them very rigorously. We have no political interference, and I can happily say that. Corporate governance is tight. There are no bribes, and largely because there's no political motivation, because, again, I come back to the quality of our shareholder, which is overseas foreign direct investment into Russia, and also we have no oligarchs or politically motivated individuals. And frankly, I think if I was being a little unkind on the company, we're probably too small to be a political football in Moscow. Very simple, keep producing gold.
Russia wants gold for backing its currency. Is there any risk of nationalization?
I don't think so. One can never be 100% certain. I mean, we might nationalize a railway tomorrow, I don't know. In fact, based on my experience this afternoon, I wish we would. As I said, we are sub-strategic level in terms of size of deposit. We have no direct experience of expropriation of mining assets of our size and similarity in Russia. So it's a very different case with oil and gas in Russia, and there have been some well-known expropriation histories in there. Again, look behind that, and you'll see some very clear politically motivated actions, and I think we're different in that sense. So it's not something that we worry about, but it's not something we're complacent about either. Sorry, the history of others being expropriated. Well, when assets are expropriated, they tend to be not much coming back. Yeah.
You did mention the oil input price. Could you tell us what percentage oil is of your input price? And secondly, I see from the research report that the indication is you're going to have your results, your full year results in June. Why does it take you so long to get them out?
So let's deal with the first one, energy costs. Energy costs are somewhere between 35 and I think 39% of operational costs. And that's broadly similar to a lot of other gold producers and, frankly, mining operations. It's a significant line item for us. The second bit of the question was, why are we so slow to report? We like to get them right. We don't have a history of restating. And, you know, you can see the time zones we're managing there, frankly. We're a reasonably small company. We only have 20 staff in Moscow that deal with our finance and administration, and they're dealing with a time zone which is I think 8 time zones across, so it does take a bit of management. That we're getting better at that, but I don't see a reason why we need to report any quicker. We don't certainly feel under any pressure for it, and we will, of course, continue to observe the statutory requirements. Nothing is hedged. No gold, no input costs, no FX either. And then we've had very, very clear feedback from the institutional investment community about wanting to be unhedged completely, and I think we've been proved right thus far.